Imagine you've just been promoted at work and your salary has increased significantly. That sense of reward and accomplishment is natural, right? What many people do next is believe they can now afford to live more comfortably, more luxuriously. A new car, a bigger house, and expensive dinners start becoming part of their routine. But what they don't realize is that this behavioral change, while it feels like a victory, might be creating an invisible trap for their finances. Lifestyle inflation is a sneaky phenomenon. It happens when expenses rise in proportion to income, keeping you living paycheck to paycheck. Instead of saving or investing, you use your raise to upgrade your lifestyle. What happens then? Your net worth doesn't grow, only your expenses do. This vicious cycle blocks wealth building because true financial freedom doesn't come from how much you earn, but how much you keep and invest. Many fall into this trap without noticing, because it's hard to resist the temptation to improve life immediately. However, the secret lies in maintaining a modest lifestyle, no matter how much you make. True wealth is built by avoiding this mistake. When you focus on saving and investing instead of spending every extra dollar, your assets grow exponentially and your financial future starts to take shape. This doesn't mean living in scarcity or giving up life's pleasures. It means being smart about where your money goes. Instead of spending on immediate luxury, you invest in assets that generate long-term returns, creating a self-sustaining wealth cycle. This mindset is what allows people with a strategic view of money to build significant fortunes, while others spend everything they earn without realizing they're missing out on real prosperity. Many believe that getting a high-paying job means they're financially secure. After all, a big paycheck can provide a good lifestyle, pay bills, and even afford a few luxuries. But relying on a single source of income is one of the most dangerous financial traps you can fall into. Imagine this. You have a stable job and a decent monthly income, and you think your financial life is set. But a sector crisis, corporate restructuring, or an unexpected layoff can flip everything upside down. What would happen to your finances if that single income disappeared? Most people don't consider this until it's too late. The reality is that relying on just one income leaves you vulnerable to the unexpected. It could be job loss, a recession, or even a personal crisis that affects your earning ability. The risk is so great that many millionaires and successful entrepreneurs emphasize diversification as the key to financial security. They don't depend on a single paycheck. They have multiple income streams protecting them from uncertainty. Diversifying income doesn't mean building a business empire or becoming instantly rich. It can be as simple as owning a rental property, investing in dividend-paying stocks, or starting a side hustle online. These may seem small at first, but over time they grow and become key pillars of your financial freedom. The secret is not to put all your eggs in one basket. By building multiple income streams, you create a safety net that makes your financial life far more stable and resilient to crises or external changes. It ensures not only survival in tough times, but also the long-term building of true financial independence. High-interest debt, like credit card debt, is one of the most silent threats to your financial health. While it may seem harmless at first, it has the power to erode your wealth without you realizing. Every minimum payment might feel like a temporary fix, but in reality, it just delays the inevitable and deepens the financial hole. Imagine you have credit card debt with 15% interest per month. Even if you're paying the minimum required, your balance will continue to grow and you'll never get ahead. It's like trying to fill a leaky bucket. No matter how much you save or pay, the money is never enough. This kind of debt is a true invisible parasite of wealth. It feeds on your financial effort and drains your ability to invest, save, and eventually build a stable future. What's worse, these high-interest debts become a vicious cycle. When you're paying more in interest than on the actual balance, the debt barely decreases. The best strategy is to prioritize eliminating these debts. If possible, negotiate with lenders or transfer the debt to lower interest options. Every dollar saved in interest is a dollar that can go towards something that actually helps grow your wealth. Whether it's buying assets, investing in education, or pursuing business opportunities. Breaking free from high-interest debt is essential to restoring your financial health and ensuring your money isn't drained by a system designed to benefit financial institutions. Free yourself from that burden and focus on what really matters, building financial freedom. Impulse spending is one of the biggest invisible enemies of personal finance. Sometimes buying something feels good, whether it's a reward for hard work or a quick stress reliever. But many don't realize these emotional purchases are quietly destroying their financial future. Impulse spending is driven by emotions like excitement, anxiety, frustration, or boredom. We often buy things we don't need to fill a momentary void or seek instant pleasure. This might include clothes we never wear, electronics that quickly become outdated, or expensive meals out. Over time, these little habits can pile up and cause more damage than expected. Picture this. You've had a hard day and stop by a store to treat yourself. You buy something unnecessary and feel better for a moment. Now imagine repeating that several times a month. It might seem harmless at first, but by year's end, you may have spent hundreds or even thousands of dollars without noticing. And that's money that could have gone toward real financial goals. Breaking this cycle requires self-awareness and discipline. When you feel the urge to buy impulsively, pause and ask yourself, do I really need this, or am I filling an emotional gap? Redirect your energy to something more constructive. Go for a walk, enjoy a hobby, or simply take a moment to breathe. Setting a fixed budget for unplanned purchases can also help control these impulses. Over time, you'll get used to saying no to unnecessary spending and start valuing what truly matters. When you begin to realize that impulsive spending is actually robbing you of long-term achievements, you start developing a future-focused mindset. Instead of giving in to temporary pleasures, you'll feel more motivated to save and invest in what really makes a difference. Buying a home, retiring comfortably, or fulfilling life goals. Often, when people start earning more, they feel tempted to increase their standard of living. That's natural. Who wouldn't want a bigger house, a newer car, or nicer dinners out? But one of the biggest lessons from truly wealthy families is that even when income grows, their lifestyle doesn't scale up with it. Keeping your lifestyle steady despite a higher income is one of the keys to building lasting wealth. When you limit lifestyle inflation and keep expenses under control, you create room to invest the difference. Resisting the temptation to spend more as you earn more requires discipline, but doing so builds a much safer financial future. Instead of spending on temporary luxuries, that money goes into productive investments, real estate, stocks, businesses, or other passive income sources. This habit, often called living below your means, is the foundation of true financial independence. It allows you to build a financial cushion and grow your net worth steadily without relying on windfalls or luck. Real fortunes are not made in a single payday, but through daily habits and wise financial choices. Families that live modestly, even with high incomes, tend to have a long-term vision. They know that real growth happens by resisting the urge to overspend. Instead of spending on luxuries, they invest in smart ways that will generate even more wealth over time. This disciplined approach allows high earners to reach genuine financial freedom. They're not driven by impulse, but by the understanding that saving and investing smartly is how you create a legacy. not just for yourself, but for future generations. So even when your income increases, remember, your lifestyle doesn't have to increase with it. True financial security lies in your ability to stay disciplined and prioritize investment over short-lived luxuries. Have you ever stopped to think what would happen to your finances if your only income source disappeared? Maybe you have a good job or stable income, but what if something unexpected happened? An economic downturn, industry shift, or personal crisis could be financially devastating if you rely on just one stream of income. That's where diversification comes in. Diversifying your income means building multiple revenue sources that aren't dependent on each other. This doesn't require becoming a business tycoon or owning a dozen companies. It can be simple but effective, like owning a rental property, investing in dividend-paying stocks, or starting a small online business or content channel. These sources may seem small initially, but over time they become a powerful financial safety net. The power of diversification lies in its protection of your financial independence. You're no longer asking, "What if I lose my job?" or "What if the stock market crashes?" When you have various income streams, the risk of total financial collapse drops significantly. If one stream dries up, the others continue supporting you. Moreover, diversification expands your earning potential. Each new stream is a new opportunity to grow. And the best part, you control it. Unlike a salary that depends on someone else, your diversified income is largely in your hands. That gives you empowerment. Diversification isn't just a financial strategy, it's a way of life. It allows you to make calmer decisions without the constant fear of losing everything at once. It's a crucial step toward achieving true financial freedom because it builds a solid foundation you can rely on no matter what happens externally. The beauty of diversification is that you can start small and expand over time. No matter how tiny your side income is in the beginning, it can grow into an essential pillar of your financial security over the years. The key is to start now and let time do the multiplying. For many, being in debt has become normal. In fact, it's often seen as just part of adult life. Car loans, mortgages, or credit card balances. Society even seems to accept this, as if living in debt is unavoidable. But this normalization might be the very reason so many people never achieve financial freedom. Ask someone about their debt, and they'll likely say everyone has debt. But in truth, living in debt is a vicious cycle that blocks any real financial progress. Debt isn't just a temporary obstacle. It becomes an anchor holding you back, draining your finances month after month. Even though society has come to accept this behavior, the truth is that this lifestyle is a trap. It disguises true financial freedom, making people believe they need to be in debt to live a normal life. The problem arises when debts increase, but personal wealth doesn't grow at the same pace. This prevents the accumulation of wealth and instead forces people to spend a large portion of their lives paying for what they've already consumed without ever achieving financial stability. Breaking free from this mindset is essential. Letting go of the idea that debt is normal and acceptable is a critical step toward transforming your financial life. This doesn't mean you should avoid all credit or never finance anything again. It means having control over when and how you use debt. When you start treating debt as an enemy to be defeated rather than a constant companion, you begin taking active steps to eliminate it. By eliminating debt and refusing to normalize it, you start creating a financial future where you are in control. The money that once went toward debt payments can now be redirected toward investments, savings, and other wealth-building opportunities. True financial freedom begins the moment you decide that debt will no longer be a regular part of your life, but rather an exception you make a point to avoid. Breaking the normalization of debt is a vital step toward achieving true financial independence. When you're able to live without relying on loans and financing, you begin moving toward a more secure and prosperous future. When most people think about building wealth, they focus on ways to earn more money through new jobs, investments, or business ventures. But one of the greatest secrets to building lasting wealth isn't what you gain, it's what you avoid. Avoiding financial traps, mistakes, and harmful behaviors is the real path to financial freedom. This principle is central to many financial philosophies, including those of Warren Buffett, one of the most successful investors in history. Buffett often says the key to financial success is simple: don't lose money. He emphasizes that while most people focus on chasing profits, the real focus should be on avoiding losses, financial traps, and impulsive decisions. The wisdom behind this approach is that by avoiding common mistakes, you lay a solid foundation for wealth. This includes steering clear of high-interest debt, resisting the urge to overspend, and avoiding the temptation of risky, quick-fix schemes. Wealth isn't built by making huge sums of money overnight. It's built through smart, consistent choices that preserve and grow what you already have. Throughout life, we all face daily financial decisions. Every impulse purchase, every unplanned debt, every rushed investment has the potential to undermine your ability to build wealth. The ability to avoid these traps is what separates the wealthy from those who are simply chasing shortcuts. In practice, this means being diligent and mindful about your financial choices every day. Instead of looking for new ways to spend or gamble your money, focus on protecting what you already own. True wealth is the result of patience and careful decision-making. Of course, there's nothing wrong with trying to earn more, but real financial stability comes from avoiding the mistakes that slowly eat away at your resources. Focusing on avoiding losses and protecting your assets is one of the most powerful secrets of long-term wealth creation. A long-term mindset may be one of the most underrated tools in building wealth. Many people fall into the temptation of seeking instant gratification or chasing quick profits. But as we've seen, those shortcuts often turn into financial traps. True wealth, on the other hand, is built over time, and it requires patience, perseverance, and above all, a clear vision of what you want to achieve in the future. Imagine planting a tree. At first, it seems small and insignificant. But as the years go by, it grows stronger and eventually bears fruit. The same happens with your money. By consistently investing, saving with discipline, and making thoughtful financial decisions, you're planting seeds that will one day become a reliable source of income and security. For this mindset to work, you need to resist the temptation of immediate rewards. Spending your investment savings on a dream vacation or a new car might be appealing now, but doing so sacrifices the growth that could come from smart financial planning. The secret of the long-term mindset is understanding that every financial step you take today, no matter how small, will have a lasting impact. The simple decisions, like sticking to a budget, investing a portion of your income each month, and avoiding debt, are the ones that will shape your future. The rewards may not be immediate, but over time, they build up into something substantial. Long-term mindset also helps you deal with the ups and downs of financial life. When you see wealth building as a marathon instead of a sprint, temporary setbacks, like a stock market dip or an unexpected expense, don't feel as frightening. You know they're just temporary bumps in the road, and your long-term goal remains intact. The wealthiest and most successful people in the world, like Warren Buffett, consistently highlight the power of patience and long-term vision. Buffett, for instance, is known for holding on to his investments for decades, letting the power of compound interest and steady growth transform his fortune. So adopting a long-term mindset doesn't just mean being patient, it means having the Discipline to make decisions that protect and grow your wealth over time. This mindset helps you resist the pull of instant gratification and stay focused on what truly matters, securing your financial future and achieving your life goals. Consumerism is a powerful force that shapes how we live. It's fueled by constant messages from media and social networks telling us we need more to be happy, successful, or fulfilled. Whether it's the latest smartphone, designer clothes, or the dream home, society often teaches us that the more we buy, the more successful we are. However, this mindset is one of the biggest traps when it comes to building wealth. The problem with consumerism is that it focuses on immediate gratification, on the now, without considering the long-term consequences. Many people, as their income increases, feel tempted to spend more to meet social expectations or to feel instant pleasure. But by giving in to these impulses, you endanger your most important financial goals, like retirement, buying a home, or creating an emergency. Consumerism is also fueled by social comparison. We live in an age where what we see on social media often isn't real life. People showcase their achievements, new cars, vacations around the world, and we often feel like we need to have the same. This creates psychological pressure to consume, leading to a constant cycle of spending and debt. The result? When we look at our net worth, it hasn't grown. It's shrunk because we've spent on things that don't add real value to our lives. By focusing on excessive consumption, you're actually spending your future to fund temporary pleasure. Instead of investing in appreciating assets, you're spending on depreciating items, like clothes and gadgets, that quickly lose their value. The key to breaking this cycle is awareness. It's essential to reflect on what truly brings value to your life and stop following consumption trends just to fit in or impress others. Adopting a more conscious mindset around spending means buying with purpose. It's not about giving up all of life's pleasures, but rather making smarter choices based on your financial goals. Instead of spending impulsively, you start investing in experiences and assets that truly bring long-term returns. This mindset shift can be difficult at first, especially in a world that constantly tells us the opposite. But once you understand that true value doesn't lie in the things you buy, but in the experiences you create and the wealth you build, you begin to make more conscious choices. Choices that not only improve your quality of life, but also ensure a much safer and more stable financial future. And so we've come to the end of this financial journey. As we've seen, the key to achieving financial freedom isn't just about how much we earn, but about what we're able to avoid, the choices we make each day, and the discipline to follow a smart and intentional path. A long-term mindset, income diversification, debt elimination, and mindful consumption are just some of the pillars that can transform your financial future. Now I want to hear from you. What did you think of these tips? Did they change the way you see your finances? If so, don't forget to like this video and subscribe to the channel to keep up with more content like this. And even more, share it with friends and family who also need this financial transformation. Let's go on this journey together toward a safer and more prosperous future. Thanks for watching, and see you in the next video.